2022 was a shocking year for the world economy, with the Ukraine war pushing up inflation and oil prices, causing economic disruption and lower growth. But the IMF and World Bank predict 2023 will be even worse, with major economies, especially in Europe, being pushed into recession by the twin pressures of high inflation and high interest rates. Kristalina Georgieva of the IMF states a third of the world will be in recession in 2023, making it the third worst year for the economy since 1991. Yet, could the recession be deeper than the IMF cautious forecast? Will recessionary pressures explode underlying threats such as high debt, low productivity and ageing populations? Or is it the case that with falling inflation, the worst could soon be over? Firstly, why is recession forecast? Why are economists so united about the inevitability of recession in 2023? Across the developed world, consumers face an unwelcome combination of higher inflation, falling real wages and higher interest rates. Now, central banks are expected to increase interest rates further to almost 4% through 2023, more than 2% above the 2021 average. This raise in interest rates will be a shock because it is 15 years since we had similar interest rates. The concern is that many business and households will struggle to adjust because they've got so used to the era of ultra low rates. Many plans were made on the basis of interest rates remaining low, but now investment will be shelved and households struggle to pay their mortgages. Secondly, real wages are falling at an unprecedented level, especially in countries like the UK and Germany, who both face the prospect of deep recession. Thirdly, higher gas prices have caused the worst kind of inflation. Higher costs, but with lower demand. For example, Germany, one of the strongest economies in Europe, relied heavily on fossil fuel imports from Russia, but since the war has stopped importing from Russia. It's quite dramatic. But the cost has been higher energy prices and declining industrial output, which is pushing an economy reliant on manufacturing into recession. All these factors have caused greater uncertainty, and we can see this in a sharp fall in consumer confidence, not only in Europe but also in the US, which is seeing a similar fall in confidence. This will lead to lower spending and a fall in business investment. Now, during COVID, the US generated record levels of personal savings. But last year, this savings ratio fell dramatically. The US savings rate fell to the lowest level since just before the financial crisis. It's a warning sign that households are in distress. It means many households have little room for manoeuvre when interest rates rise. In Europe, the worst of the price rises have been absorbed by government bailouts, but this has come at a high cost of growing public debt that cannot be sustained. As the UK's experience shows in September, markets are now much more concerned about debt, and this means there is little room for fiscal stimulus, despite monetary tightening and weak household spending. What this means is that when we enter into recession, there is very little room for economic policy. Interest rates can't be cut because of inflation, and governments have limited scope for higher spending and expansionary fiscal policy because of markets' concern about debt. But could it all be worse than the moderate declines forecast by the IMF and World Bank? These institutions tend to make fairly cautious forecasts, but unwilling to stick their necks out for dramatic changes. Some economists do fear that 2023 could be worse than the forecast suggests. This is because as the economy moves into recession, it creates a negative spiral that magnifies the underlying weakness of the economy. Firstly, housing markets are overvalued around the world, and higher interest rates will be the tipping point to cause a big fall in house prices, which will inevitably cause lower growth. Secondly, private and public sector debt have reached record levels. Following the great financial crisis, weak growth, COVID government bailouts, all this pushed up debt. A further economic downturn will worsen debt positions and could lead to a repeat of the debt crisis we saw in 1982 after a similar recession caused by high inflation and high oil prices. All these short-term pressures are on top of underlying problems such as low productivity, low growth, global warming, ageing populations and geopolitical uncertainty. Whilst there is hope oil prices may fall, the ongoing war in Ukraine is liable to cause upward pressure on oil and gas prices. Europe survived 2022 by importing liquid natural gas. But if we have a cold winter and continued economic conflict between Russia and Europe, it will make it harder to fill gas reserves for next year. Commodity price experts predict it will take several years for gas prices to return to normal. High gas prices are here to stay, and this is bad news for European industry. The strongest economy in the past few decades is China, but it also faces its own unique problems: a property market in disarray, falling house prices, firms going bankrupt. It will be a real test for the Chinese government, with the uncertainty of mass COVID cases further disrupting the economy. And it's not just domestic pressures in China. The war in Ukraine, the increasing authoritarianism of China, is discouraging foreign investors, with a new motto of anywhere but China. So this will be another drag on global economic growth. It's worth briefly mentioning why this recession will be different to many in the past. In many ways, it will be worse than previous recessions because the average worker is being squeezed from multiple angles, leading to this unprecedented fall in real wages. The only really good news is that labour markets remain relatively strong, with unemployment relatively low for this stage of the economic cycle. So pay is low, but jobs are available. But this does hint at an underlying weakness with labour participation falling post-COVID, leading to the lower productivity, which has been a major problem of the past 10 years. The consequence is that we are likely to get a low unemployment recession, but it will be very painful for workers, especially the low paid. Now, given all the wealth of bad news, are there any reasons to be more optimistic? Firstly, inflation is expected to drop sharply during the first half of 2023. The record energy price rises of last February will drop away. Secondly, weak growth will moderate demand and keep oil prices below $100. Thirdly, momentum in the US economy is still relatively strong, with low unemployment and a robust labour market. Also, some economies have spare capacity, still catching up from the COVID recession of 2020. So, although there's a lot of bad economic news, some are hopeful that falling inflation will help the economy return to normal. Also, not all countries will enter recession. More hopeful sources of growth include India. India is set to be the most popular country in 2023 and is predicted to maintain strong growth of around 6%, with access to cheap oil and the growth of manufacturing and service sectors. Another feature of the 2023 recession is that it will be very uneven. Some households, especially young people renting or with high mortgages, will struggle in 2023, but older households with smaller mortgages and more savings will be insulated from many of the recessionary pressures. So it is a recession which will be very hard for low-income groups, but not everybody will feel the pinch in the same way. So the headline fall in GDP may mask the extent of the economic pain. So to summarise, 2023 is definitely going to be a very difficult year. Many economies are going to enter into recession, and this will affect the low paid and those renting and big mortgages much more than many others. The depth of the recession we'll have to wait and see. It depends how much inflation falls and how far central banks feel they need to increase interest rates. If you haven't seen it already, do watch this video on the global housing market and why house prices are likely to fall, causing further economic decline. Hope you like this video. Please give it a thumbs up and see you soon.